Hi, I'm Jeff Swinoga. I'm the CEO of Exploit Discovery. We have 4 great properties in Ontario and Quebec. We just announced the sale of our Newfoundland assets to Newfound Gold just 2 days ago. We've got $3.6 million in cash. Eric's brought us a 14% shareholder, and we're here to tell about a great story we have.
Jeff, good to see you, sir.
Oh, that's great.
Welcome to Beaver Creek. Welcome to Beaver Creek.
Honestly, the mood in Beaver Creek,
it's amazing, right?
It's feeling good. Yeah.
Yeah, I think it's not a Beaver Creek, because I go to these conferences and everyone tells me it's awesome all of the time.
Oh yeah, yeah.
I know. But what we've got behind us, underwriting this, is an amazing market. Gold price, silver price, copper's getting there.
Yeah.
It's good time. Good time to be in the space for sure. Well, look, we've got to start with the new news, obviously. With Newfound Gold. I mean, tell us, how'd that deal come about?
Super pleased because we had these great claims in Newfoundland, right? And our goal was really to do right by shareholders, be the next Newfound Gold and so forth. And Newfound Gold, honestly, come out with their 2 million ounces this year, and actually doing their deal with Maritime Resources and being a near-term producer. It all kind of lined up, and it made sense that they're providing a great price for our claims.
Yeah.
And they're right on the Appleton Fault, Bullseye, Gazebo, and others, So it seemed like the right time, because we have been, executing on these new deals, these new properties, right? Again, Hawkins, 60 kilometers in Ontario, right? Quebec, the 3 properties that Cartier has. Yeah. And all high grade, VG on surface, for the Quebec properties. And so, and you asked last time we did the interview, how do you allocate capital? So now with this newfound deal that we've done selling our claims, the deal, if I can get to specifics, it's $7 million of newfound shares, another 1.8 million of newfound shares. We deliver the other properties, and then we get a 1% NSR back. So pro forma, we've got about $10–11 million in value with our cash and their shares. And what a great position to be in at a market cap of $9 million, to have $10 million of value in Treasury. And then we can actually start executing on our 4 properties that we can talk about. Yeah.
So, and was that a nice return in terms of the amount of time and effort and money that you'd spent on those projects yourself?
Oh yeah, absolutely. Yeah. Like for example, we had good hits, high grade zones, gold zones, but we never had resources. Yeah. And the question is, could we have built resources? Could we have done that? And Newfound did spend a lot of money doing their resource. So for us, the value proposition with the claims we had, it made sense to actually take shares in Newfound, watch them go, watch them deliver on maybe more ounces they can have on the Appleton Fault, and share in that ride. Okay. And we also take back a 1% NSR.
Yeah, so some future upside as well. Okay, so both sides get what they want out of it.
Yeah, it's definitely a win-win.
Pro forma, $10–11 million. That's a good place to be. And get focused. So let's talk about focus. Should we start in Ontario with Hawkins? I mean,
sure.
What's happening there?
Yeah, Hawkins is great. One thing, Hawkins is for everyone's benefit, stepping back, it's near Timmins. It's a 60-kilometer property package. It's got this fantastic deposition zone going right through it. It's got over 300,000 ounces, called the McKinnon zone. We hired Natalie Renault, who used to be the prior VPX of the company that had it before. And she's like a Hawkins expert. And the way Hawkins came into being was that Don McKinnon, who co-founded Hemlo, actually discovered the McKinnon zone on Hawkins. So you have amphibolites to the north, you've got tonalites where the gold mineralization is, and in that contact zone, that's where we're seeing the 300,000 ounces, right? And the prior company, they had a resource came out in 2020, but they did about 12,000 meters, but they didn't update the resource. So for us, we're looking at the whole region. The resource is great to have, but this whole region, there's like drill results that Goldfields did for 40 grams over 1 meter. That's to the west. The east has really not been looked at. There's an area beside the resource where the contact zone continues for a couple kilometers that hasn't been drilled yet, but great trenching samples. So 300,000 ounces is a good start. We didn't have 300,000 ounces in Newfoundland. So it's a great, what a big package to build upon.
Right, okay. So what are you doing? Let's actually describe the other assets as well. So we'll go Fenton, Wilson, Benoit.
Yeah, sure.
Right?
Yeah.
So again, tell people who need a story.
Yeah, so Fenton, Wilson, Benoit are in Quebec, about 2 hours north of Val-d'Or. Starting off with Fenton. It's near some of the bigger players like Windfall, and there's a mill close by with Bachelor Lake that's owned by Bonterra and so forth. So great jurisdiction. And Fenton's got 300 meters of outcrop. Great channel samples on surface, high grade. It continues down for like 300 meters or more, and it's we're doing some reanalysis on it because Cartier has these properties. We're optioning them, to be clear, but they haven't spent a lot of time in them because they're busy with their other project, right? So we're looking at these high mag anomalies, and where that historic resources, like back in the 1990s, right? They have this non-compliant resource, so I think it's like 40, 60,000 ounces. But that's where the main anomaly is, right? That's where the drilling was focused on. But there's other anomalies along trend, and the dive deck is going through it. So if you can imagine two kind of zones, if you will, and then of these anomalies, but they haven't drilled along the strike length, and it's open at depth as well. So it looks really good, really promising, but we're doing some field work right now. We're replicating some of the channel samples they have. We're planning on drilling at some point, so we're prepping to maybe announce a drill program later on this year.
Okay.
Yeah.
Okay.
So that's Fenton. Yeah.
Fenton, Wilson.
Wilson, similar, almost like high-grade chimneys underground, similar to Fenton, so similar type of work at Wilson. Benoit's got 240,000 ounces of gold. It's under a bay or a lake feature. And so, but again, these anomalies that we're seeing, there's some on surface that we're looking to drill. But yeah, it really hangs well nicely together. Like all of these Quebec properties, it's so well behaved, the way that you can see the trends. We hired Verify to kind of do the 3D modeling and kind of see this. So I encourage people, in a couple of days, we're going to put it onto our website to actually look at what we're seeing and where the trends are and where it's open. It looks really good.
Okay.
Yeah.
There's a kind of picture painted of all the assets in the portfolio now. Prioritization was important. Okay, you got some stock, which is liquid. You got a bit of cash in the bank. You got to make some decisions now because I'm trying to understand what type of company I'm investing into. Are you an exploration company? Are you just building portfolio and then offloading? How does it work?
Well, what investors get with us, you get ounces in the ground, right? Literally, like 4 months ago, we had no resources. Now we got 680,000 ounces, right? Yeah. So every day the gold price goes up, you get benefit of the value of those ounces in the ground, right? And so we're going to be doing, as I mentioned, a regional scale of the plumbing system at Hawkins to see what can benefit, whether we can either replicate McKinnon several times, but also improve the grade, right? And so potentially you're going to get ounces, you're going to get grade, right, from us. Same thing with the Quebec properties, we're going to be looking at where we can find more high grade under these anomalies and actually create maybe update the resource at some point too. So that's going to be important. And your question about how you allocate resources, like we did this last interview, you talked about, okay, we got Newfoundland, you got Ontario, Quebec, how are you going to get, well, now we've monetized, the shareholder vote's coming up, monetized Newfoundland. So we have more resources than most juniors actually make to our market cap. But then Hawkins looks very good. We don't want to rush the drill, but we probably will start looking at possibly a drill program later on this year for Hawkins. Same thing with Fenton, and then maybe Wilson, then maybe Benoit.
So why do you say that? Is there just a lot more work to do with the data that you've now got? Is it that, or are you saying let's just kind of work out what the market's doing and what it's rewarding?
Yeah. So we're looking at these properties with fresh eyes because some companies will go in and start drilling right away, right? Yeah. And not really look at the geophysical characteristics that created those those ounces. So we're stepping back and have been stepping back. We've been kind of busy actually last couple of weeks working on this deal. Yeah. But now it's the new properties, right? Now we're focusing on this. There's going to be more newsworthy items coming out in the next couple of months, right? And the focus is going to be on these properties. But we're not trying to rush the drill because once we start drilling, we want to be successful. It's, you can call it smart exploration if you want or whatever, but we want to make sure that we're not just drilling a known resource when there could be something bigger beside it. You know what I'm saying? So when you look at 60 kilometers, that's a big package. That's a company maker potentially, right? So when you look at, could there be one 5 kilometers away? Could there be one, we're finding tonalite along a contact zone, along 2 fold noses that are further on to the west. So Natalie's looking at that. And so if we can find another bigger resource, than McKinnon.
Tell me about the conversation with Philippe Cloutier at Cartier, because when you pick these assets, obviously Hawkins will park up for now, but Fenton, Wilson, Benoit, they've done a fair bit of work on that. I mean, obviously he's focused on his flagship, obviously, but they've done a fair bit of work, and you've done your diligence, and the diligence was based on the data he gave you, presumably. So and you're saying, well, actually, I kind of like your assets, but I don't necessarily like your focus or what you spent your time on. So we'll pick up the assets and we'll go do something else. That's where it's sort of coming across. So is that what of the data that he created has helped you inform that decision to say, like, there might be potential over here?
Yeah, no, Philip and team did a great job. You can call them drill ready, but we do need drill permits. Yeah. So we have applied for drill permits, and so it just takes time. And you do have to make sure you're.
Is it quick?
Probably 2 months.
Okay.
So in the interim, we're doing the necessary work to kind of revalidate some of the things that they've been doing, looking at it again with fresh eyes. I mean, again, they did great work, but when you have different geologists in the room, they have different perspectives. Yeah. And we actually see some potential controlling features. I mentioned it's well behaved. That could pay dividends for our shareholders in the sense of finding new ounces, right? So we are taking just a little bit of time, just to examine what they did. Yeah. And it's a lot of data, as you mentioned too, right? So examining what they did, but also looking at with fresh eyes, with new geologists that we've employed, and then the drill permits will come in. So things could come together later on this year.
Yeah, no, look, I get what you're saying. Yep. And they spent time and money and effort on that, and they weren't getting rewarded for those things. Oh no. I'll be frank, and I think Philip would say the same thing. It may be the time of the market, but and it may be, as you say, they weren't focused on things that the market is prepared to reward. So you must have a good idea of what you think in the current market the market is prepared to reward. So what is that?
Yeah. Well, I mean, last time you mentioned about early production and getting into development and so forth like that. So those projects aren't ready yet, but that would be sort of a goal at some point that we actually can work towards. The fact that it's got high grade, what a great start. The fact that you got these high grade chimneys kind of sloping down and open in certain areas. And
what sort of grade is high? What do you mean by high?
Oh, well, one hit at Fenton is 356 grams over 0.6, and that's part of a larger intercept. So we're seeing, and that hasn't been followed up on. So anyway, so we're seeing this, and we're saying, well, if we can increase the probability of finding more high grade with the known resource or historic resource that 1990, and also increase the probability of actually finding new areas underneath these EM anomalies, then what a great opportunity, for us. And so ultimately, I guess your question is, what are you going to do ultimately with these projects, right? So we're creating value here. If ultimately that we monetize them, or if we put them in production or whatever, the key thing is doing the work, because gold's at $3,600. A lot of times these projects, they get ignored, right? Yeah. And look at our property in Newfoundland. It was ignored. I mean,
look, I think there's a lot of projects which are doing gold projects which are doing quite well at the moment, because the gold is at 3,600. If it was at 2,000, I think there'd be in a world of hurt and pain. But likewise, for explore-cos, that value doesn't necessarily trickle downhill straight away. So my question wasn't necessarily what do you do? It's what do you think the market's going to value, and do you take a short-term view and say, well, it's valuing that now, so let's do that thing now, and in a year's time it changes, and you've been working and spent money on the wrong thing. So, so just on a simple basis, what do you think the right way is to drive that value?
So for us with these properties, is finding more high grade. That's going to be more ounces, more high grade. People like that. More areas where the resource potentially could be, what I'm saying? Either it's on Hawkins or the Quebec props I mentioned. The great thing about this Quebec option deal that we have with Cartier is that we can spend all the money on one property and keep the other two, or we can actually drop 2 properties, keep one.
How much have you got to spend? What's the terms? It was over 5 years, wasn't it?
Yeah, it's 5 years,
So was it $1 million?
Yeah, so roughly start off it was about $200,000 in some shares. Yeah. Every year it's about a similar number in some shares, and then but if you spend all the money on Fenton, say for example, you still get to keep Benoit and Wilson. Conversely, you spend all the money on Benoit, you can keep the other, or you can drop one of them, drop 2, keep. It's a very flexible agreement.
And what are the other terms in there? Do you have the ability to offload one of those 3 assets yourself within the 5-year period? As long as you make the payment.
Yeah. So for example, if we wanted to keep one and not keep the others,
Let's say if you didn't fancy mining under a lake.
Well, I mean, people have mined under lakes before.
I know they have, and I've done a couple of programs
no.
about it as well. So I understand. We've had experts in. It's fine. But some people don't fancy that, and others do. So,
and to your point, this is underground, right? So if we went underground and actually under the lake, and so the environmental impact would be small.
Yeah. Okay.
Versus open pit in a lake, right?
Or draining and putting up dams. Yeah.
Exactly.
I get it.
Yeah.
But so the point is, you could offload one.
Oh yeah.
To monetize that in some way, if you wanted to.
We'd have to execute on the full agreement.
Okay, that's what I was getting to.
Yeah. So if there
$1
was
million bucks plus $1 million of shares.
Yeah. So if there was one thing we could do under the agreement is we could pay everything all at once. We could execute the agreement and then we could do something. But we want to be good partners with Cartier, and it's open communication, transparency, and so forth. So we would all win in that situation.
Yeah. Okay. I guess if you paid in shares now and the share price went up, it's all good.
Yeah, we're super undervalued right now.
Yeah. Well, let's take a look at that, right? I think it's very interesting to look at the kind of corporate structure. You've got a tough market for the last 5 years. Some would tell me 10 years. It's been a tough time, right? With a few moments of sunshine. You're starting from a low base.
Mm-hmm. Yeah.
But do you feel that you kind of sorted out the portfolio, sorted out the balance sheet a little bit now? What have you got to do to kind of get the ship righted, as it were?
I think we're on our way.
Yeah, no, I agree with that.
Yeah.
But what's to do? What's left to do?
Well, you know what, and the plan, the strategy that we had was to really look at resources that we can pick up in a high gold price environment.
Right.
So we picked up 4 great properties.
Yep.
I mean, that in itself, in the last 4 or 5 months, to pick up 700,000 ounces. With usually when the gold price moves up, everyone is, they want to hang on to what they have. But they trust us to put those properties in our hands to do the right thing and then create value. Okay, so that part of the strategy has been executed upon. The next part was monetizing the Newfoundland claims.
Yep.
That's been done. We got a great price, win-win for both companies. The next part of the execution is actually what you were talking about. Finding ounces, finding high grade, looking at those properties with maybe different eyes, maybe even with the eyes of a higher gold price. Right? And then sort of looking at these regional possibilities, hiring great people like Natalie. She's an expert at Hawkins, PhD, super smart. And then Quebec, we've got Mark Richardson working on that one too. He used to work for us in Newfoundland as well. Super smart guy as well. So getting the right team in place, and actually focusing on each of those properties. And to your point, we don't want to spread ourselves too thin, right? So what's going to create the most value for shareholders? And I think as the gold price is moving up, the fact that we can hopefully show in the future that we're going to get more ounces, higher grade ounces, and that we're going to find more high rate of discovery, that's going to be important. Because they're going to be looking at who's next on the chain, right? So, yeah. Makes sense. Yeah. So the strategy's working out, Matt.
Keep it simple. Look, I think, look, congrats on doing the deal with Newfoundland. I think that was, Newfoundland Gold, I should say, that works for everyone.
Yeah.
Getting your ducks in a row, 4 great assets.
Yep.
Now you just got to deliver.
Absolutely.
Easy, right?
Yeah. No, it's great.
Easy.
Yeah.
Okay, go
The
Jeff.
hard part's done.
Go Jeff. Thank you.
Yeah, thanks, Matt.